Alright, let's dive into something that's been making waves in the financial world recently. HSBC, one of the biggest global banks, is pulling out of the Australian retail banking market. But here's the kicker: this isn't just a minor adjustment, it's a full-on exit. HSBC is closing all 19 of its Australian branches over the next 18 months and selling its mortgage and personal loan portfolio to Blackstone, a global asset giant. Personally, I think this move is a massive statement about the challenges foreign banks face in Australia's highly competitive market. What makes this really interesting is that HSBC isn't leaving Australia entirely, they're just ditching retail banking. They'll still operate private and institutional banking services, which tells me they see value in staying, just not in the consumer space. Now, let's break this down. HSBC has been in Australia since 1986, so this isn't a hasty decision. They've got 2,000 employees there, and while they're not sharing details about job losses yet, it's clear this will have a ripple effect. What many people don't realise is that Australia's banking market is dominated by its Big Four: Commonwealth Bank, Westpac, ANZ, and NAB, alongside Macquarie. These players control about 80% of the mortgage market, which is a staggering $2.5 trillion. If you take a step back and think about it, that's a nearly impenetrable fortress for foreign banks. HSBC isn't the first to throw in the towel. Citi also exited the Australian mortgage market a while back. This raises a deeper question: is Australia's banking market simply too tough for outsiders? From my perspective, HSBC's decision is a strategic retreat. They're focusing on what they do best: private and institutional banking, and cutting their losses in retail. But what this really suggests is that even global giants like HSBC can't crack certain markets, no matter their resources. A detail I find fascinating is that Blackstone, the buyer, has appointed Pepper Money to service the loans. This means HSBC employees might find opportunities with Pepper, which is a silver lining, but it's still a major shift for those affected. Now, let's talk about the bigger picture. HSBC's exit is part of a broader trend of simplification within the bank. They've been streamlining operations globally, and this move aligns with that strategy. But it also highlights the challenges of globalization in banking. Just because a bank is successful in one market doesn't mean it can replicate that success elsewhere. In my opinion, this is a wake-up call for other foreign banks eyeing Australia. It's not just about scale, it's about understanding the local dynamics. What's next for HSBC? Well, they're phasing out non-mortgage retail products like transaction accounts, savings, and credit cards. This isn't just a partial exit, it's a complete wind-down of their consumer business. One thing that immediately stands out is the timing. The sale is expected to complete in the first half of 2027. That's a long runway, but it gives HSBC time to manage the transition smoothly. As I wrap this up, I'm left thinking about the broader implications. HSBC's exit isn't just a loss for Australia's banking diversity, it's a reminder of how localized dominance can trump global ambition. Personally, I think this story is far from over. It'll be fascinating to see how other foreign banks respond and whether Australia's Big Four will face any new challenges. For now, though, HSBC's move is a bold statement about the limits of global banking. What do you think? Is Australia's market too tough to crack, or is this just a strategic misstep by HSBC? Let me know in the comments below.